Particularly that he is a man of his principles, values and character. मुझे लगता है कि आज कहीं ना कहीं whenever we are like meeting people, we meet people every day, we come across with a lot of people. If somebody actually certify you with these characters, it means you at least made one connection with one person. So connection is very, very important, and that I think Goel sir was absolutely, late Goel sir was absolutely capable of. And this is the connection that is like, spread, I believe, all over India. So a few lines that I would like to read for giving him the respect and, of course, for remembering him. Our hero, our inspiration, Shri Phulchand Goyalji, a man stood the tallest with head held high. His values inspire us to take the good work forward. He will live in our heart forever. Can we please have a big round of applause for Mr. P.C. Goyal? Thank you, ladies and gentlemen. And once again, I would like to take the opportunity to welcome you all to this Global Valuation Summit 2019. And on this occasion of the 50th Indian Valuers Congress, I thank each one of you to be a part of this brilliant platform called Global Valuation Summit, organized by Institution of Valuers, partner organizations IOV, RVF, the Institution of Surveyors of Kenya, ISK, American Society of Appraisers, ASA, Hypzert, Germany, Singapore Institute of Valuers, SISU, Thai Appraisal and Estate Agents Foundation, Bangladesh Survey and Valuations Company. And now it is the time to introduce our speaker and start the first technical session of the day. And the first session would be on changing face of mortgage valuation. First and foremost, I would like to invite on stage the keynote speaker and the managing director, Hypzert, and Reiner Lux, Mr. Reiner Lux, to be on the stage. The managing director of Hypzert since 1996, Mr. Lux, had served as the executive director at the School of Real Estate Finance in 2012, holding a business degree from the university. He has also been serving as the general manager at VDP Expertise. So can we have a big round of applause for Mr. Lux? Now I would like to welcome Mr. Sanjay Gupta. He shall chair the session. He is the Managing Director and CEO, PNBHFL. Mr. Gupta is the Managing Director of PNB Housing Finance Limited since 2010. Under his leadership, the company has scaled new heights and has witnessed a sea change in its operational roundness and to go to the market strategy. As a consequence of which, today PNB Housing is the 5th largest housing finance company in the country by loan assets, 2nd largest by deposits. It is the fastest growing in the sector with one of the best quality assets portfolio. Mr. Sanjay Gupta. Thank you, sir. Now I would like to invite the moderator for the panel discussion, none other than the Vice President, Institution of Valuers, Mr. Sandip Kumar Deb. Mr. Deb, the National Vice President of Institution of Valuers, has got degree in Civil Engineering, Law, Real Estate Valuation, and Quantity Survey. He is also a Master Degree holder in Real Estate Valuations as well as Plant and Machinery Valuation. Mr. Deb is also a 2-time gold medal winner of Institution of Valuers as the Best Author and Best Editor. Ladies and gentlemen, join me welcoming Mr. Deb to the dais. In the panel, the panelist I would like to invite now. I would like to invite Mr. R.K. Saji Kumar. He is going to be one of the panelists, and he is an Executive Director of IBBI. Mr. Saji Kumar is working as an Executive Director with Insolvency and Bankruptcy Board of India. He's handling legal affairs and court proceedings, continuing professional education, knowledge management and partnership, right to information and communication. Ladies and gentlemen, presenting to you Mr. K.R. Saji Kumar. Please join me welcoming him. Next in the panel we have Dr. Sopon, the President, Thai Appraisal and Estate Agents, Thailand. Is he? All right. Dr. Sopon is the President of FIABCI Thai, the Thai Appraisal and the Estate Agents Foundation and the Agency of Real Estate Affairs. IAAO representative to Thailand, Director of Thai Real Estate Business School and a member of the Global Valuation Forum of the Appraisal Foundation. He had experience in real estate research and valuation since 1982. Ladies and gentlemen, one of our panelists, Dr. Sopon. Then we have in the panel Mr. B. Kanga Sabapathy. Mr. Sabapathy is a renowned academician and author in valuation who has authored 22 books in valuation and written 706 technical papers. As a faculty, he has participated in more than 200 seminars. He is the recipient of 18 awards, including a gold medal from the Institution of Valuers. Ladies and gentlemen, Mr. Sabapathy, the renowned academician, faculty, IOV, RVF. And last but not the least, I would like to invite, there are two gentlemen left for the panel discussion, Mrs. Sunil Aggarwal and Mr. Harun or Rashid. So I would request them to also come on the stage and take the dais. Sunil ji has over 23 years of experience in the real estate sector and is the founder of Black Olive Ventures, a real estate valuation and advisory services company. Mr. Sunil has expertise in real estate sector across various geographies, asset classes and functional domains, including real estate development, fund management and advisory valuations, transactions, corporate real estate and education. He is an industry thought leader and was featured as the professional for the year 2010 in Reality Plus magazine. Ladies and gentlemen, that's Mr. Sunil Aggarwal. And for Mr. Harun or Rashid, I would request Dev sir to say a few words.
So, it's my privilege to introduce Harun or Rashid. He is from Bangladesh and he is the secretary of the Bangladesh Surveyors Association and he is the managing director of one of the biggest valuation firm in Bangladesh. So let us give him a big hand, Mr. Harun Rashid. And the seventh panelist of this program, we have invited Mr. Abraham Samoei, the president of Kenyan Institution of Surveyors. So I would like to request Mr. Samoei to come to the dais.
That is Mr. Harun or Rashid and Mr. Samoei. Can we have a big round of applause for these two gentlemen? They are going to be in the panel discussion and with the panelist member. Thank you. Now I would request the Managing Director, Hypzert, Mr. Lux. He is the keynote speaker for this particular session to say a few words. Can I request him to come to the podium and deliver his address? Thank you.
Good morning, ladies and gentlemen. Thank you very much for the warm welcome. It's a great honor and a pleasure for me to speak to you today. As mentioned, my name is Reiner Lux. After the discussion yesterday afternoon, I dare not to say that I'm the manager and director of Hypzert, a company which was founded 23 years ago by the Association of the Banking area. and this as a small certification office that became now an initiative of the entire German financial industry. Back then, before Hypzert was founded, there was a small crisis in Germany. One of the biggest project developers had brought its own manipulated appraisals, and the banks made the mistake of taking these valuations as a basis of a loan without checking them first. Hypzert was established and in the wake of that crisis, but that the company would subsequently develop so significantly and become so important is nothing that no one would have thought possible at this time. Ladies and gentlemen, so far Hypzert has certified almost 2,000 valuers, and in addition, almost an equal number of experts who work in the field of a so-called small loan, that is properties with a value of under 400,000 euro. Yesterday we heard from the guy of the United States, the number is 250,000 for the United States. And we have qualified them through an e-learning system, so that we have a total of more than 4,000 people who work in the German financial industry and whose quality is assured by Hypzert. I think we can be a little proud in saying that the Hypzert qualification today is a state of the art in the financial business in Germany. There is something special about Hypzert qualification. The certificate is and the designation is valid only for a certain period. After 5 years, the valuer must be recertified and make a redesignation and show that the knowledge is still up to date. Furnishing proof of further yearly professional training, as many organizations require, is of course important and the right thing to do. But having to pass an exam every 5 years is a totally different challenge, as the valuers confirm me time to time again. Ladies and gentlemen, I believe that we at Hypzert can be especially proud of our professional groups and experts. Over the last 10 years, they have published some 50 studies on the valuation of special properties. In the last 3 years alone, they published studies regarding the valuation of properties, the valuation of logistic properties, the valuation of nursing homes and assisted living, the valuation of retail properties, the valuation of storage facilities, are a bundle of 5 studies that looked into the valuation of important asset class types that are used every day by all valuers. By the way, a lot of these studies have become standard setting in Germany. And last but not least, the valuers work in helping prepare these studies are entirely voluntary, which means without payment by Hypzert and often on weekends. This shows colleagues' strong ties and identification with the Hypzert family. In my opinion, some of these studies would be suitable and could be made available to organizations like yours, that the content could also be used internationally. I would please if you accept this offer. Ladies and gentlemen, in order to illustrate the challenges for instance, German real estate banks are facing, I would like to pick one of these banks and have a look at this bank. I like to choose the Areal Bank, for example, with headquarters in Wiesbaden, a few kilometers far away from Frankfurt. Areal Bank assists national and international customers with their real estate investment in Europe, North America, and Asia Pacific. One feature of these banks stands out in particular in its direct and long-term relationship with the customers. Areal Bank financed commercial properties, in particular office buildings, hotels, retails, logistics, residential properties. Their special strength is the ability to combine always local market experience, like here in India, and industry-specific know-how. These strengths allow it to offer tailor-made financing concept that meets the special need of our national and international customers. Regional sales at the Realbank are structured into sales centers in individual regions worldwide. In addition, the experts on site, the headquarters in Wiesbaden, sales centers of industry specialists with expert team for financial hotels, retail, logistic properties, and their special focus on customer-specific requirements for the customers. Why I'm telling you all these in details? I'm not trying to advertise for Realbank in Germany, really. No, I'm trying to demonstrate that these institutions like as Realbank are highly interested in having organizations like your organization and in Germany, of course, like Hypzert, that deal with issues that are such vital importance for them. I have already mentioned the Hypzert studies, but there are also mortgage lending value examination for those valuers are based abroad, work with German Pfandbrief banks, and prepare valuations that do not feature the current market value, but also the sustainable mortgage lending value, which is very, very important for a Pfandbrief bank like a Realbank. And what is true at the national level for Hypzert is of course also true on the international level for WAVO, organizations like WAVO or the International Valuation Standard Committee. And that is why we at Hypzert do not hesitate for a moment to support these activities and initiatives and become members of WAVO and IBBI, and also that is the reason that I'm coming to India. As an internationally oriented bank, it is immensely important to know who is familiar with the national methods in their respective country and who has a local knowledge. And this is exactly why I'm standing here. I would also be glad if your organization maybe become a WAVO member and would support the title WAVO World Recognized Valuer in order to achieve even greater reach and recognition. Ladies and gentlemen, also a great part of us present here are not from the banking sector directly. We have to talk regulatory issues that we say in Germany are not exactly fun. And you will certainly agree me after having heard what I have to say now. Since the crisis in 2008 and 2009, the environment in which credit institution has been marked by increasing regulatory requirements and significant change in banking supervisory. In particular, this includes the transposition of the financial of Basel III, approved by the group of governors and head of supervise in the European law is Basel IV. And I would like to mention that the sustainable value, a concept similar of the mortgage lending value, was included in the legal framework, and this is something that IBBI and other organizations is looking into now. Furthermore, the European Commission results in a review of supervisory regulation and EBA that default risk position and determinations of downturn LGD, loss given defaults, in an upswinging movement had led to additional regulatory changes. And when we have to bear in mind that the ECB, the European Central Bank, and the EBA, the European Banking Authority, and the European Commission proposed further changes regarding treatment of non-performing loans, and with respect to this transaction processing, there are new challenges from both national and European regulations, for example, regarding IT and information security risk and the prevention of money laundering, tax evasion, and the financing of terrorism. Ladies and gentlemen, as I promised, the last few minutes have been heavy going for most of us. Some of you from business auditing might even have understood something of it, but let me summarize what I wanted to get across to you. Nowadays, regulatory issues require essential time and financial resources of the banks. A large number of the employees hired in recent years in German mortgage banks were employed to meet these responsibilities. This, of course, an important cost factor, makes it more difficult for financial institutions to become more profitable, which the German supervisory authority demand time and again that they be. And that is something, the reason also of the fee for the valuers. Now I want to give you a small insight into the German residential market, just 2 minutes, where not much had happened for years. In fact, we had a sideways movement in 2001 and 2002 when growth rates were clearly lower than the inflation rate. But since the end of 2008 and 2009, there has been quite a lot of movement in real estate markets, and for the last 2 or 3 years we have ever been facing the possibility of a real estate bubble. Indeed, prices for the residential properties again rose drastically in 2018 and 2019. The VDP Immobilien Index, real estate index for single and two-family houses rose by 8.2% on average, while in the price of the owner-occupied apartment increased by 5.8%. Additionally, the capital values for yield-oriented multifamily dwellings increased by 9%. Given the background of missing investment alternatives and the solid general economic data that grant a persistent high demand on commercial residential properties, commercial properties are the most important asset class for both national and international investors in Germany. Of overall transaction volume, including residential properties, around 58% came from the national and 42% from the international capital sources. We observed a clear increase in activities from European and Asian investors in the German market. And that makes it clear once again how important work of international organizations like WAVO and IBSC is. There are two sides, buyers and seller. Are they always talking about the same thing? When I got the invitation for today and I was asked to give a keynote speech, I prepared a speech and not a presentation. And the same thing is here. Are they always talking about the same thing? Starting with such spaces thing, such building dimension and the measurement to land registration is the first step. Ladies and gentlemen, this is how I would explain the real estate markets. And as I have said, we have to ask what will happen next in the real estate market given current geopolitical challenges. Against these backgrounds, the importance of real estate forecasters will certainly increase. Also, Mark Twain once said, you should by all means avoid forecasts, in particular those about the future. And Mr. Seeger said, most forecasts are good, but the future pays a little attention to them. I'm impressed by the quality of my sister company, VDP Research, the forecasts, which have been produced for several years now. And this for several real estate classes on the residential and the commercial side. Ladies and gentlemen, even thought, as I said before, developments in national and international property markets are quite positive, and these developments can also pose significant problems in financial institutions' daily business, and when market values and mortgage lending values drift further and further apart. For Pfandbrief banks like Areal Bank, the Pfandbrief is one of the most important refinancing instruments. And the mortgage lending value with its 50% limit is especially important for us. Of course, we believe that the difference between the market value and the mortgage lending value is an essential quality seal of the Pfandbrief. But when the market value and the mortgage lending value diverge by 30, 40, and in some cases even 50%, this is no longer anything which has to do to protecting the investors, and it is now on the banking supervisory to take these now in a long-term development into account. It seems to me that the LTSV concept, the long-term sustainable value concept, which is internationally oriented, has a clear, better approach. Ladies and gentlemen, conferences like this have the goal of increasing transparency in property valuation and in real estate markets to examine valuation method and improve standards wherever possible, and to improve the training and qualification of valuers. This brings me to the next point. For several years, the issue of digitalization has been ambling around in almost all of our industry, including, of course, the finance and the real estate industry. Every day, and not only in Germany, startups pop up like mushrooms. Also, statistics tells us at the best only 1 of 10 will survive. It will be in our responsibility to pay close attention to current developments and to check each individual case whether a digital solution can improve our existing application, performance and services, like we have seen it yesterday in the session yesterday afternoon. What impact will digitalization have on the real estate daily practices? To what extent will our responsibility change? Will we still need valuers in their current form in 10 or 15 years? With respect to property valuation, we certainly first have to mention AVM's automated valuation models. Many organizations are already looking into these models intensively. As far as I know, there are two competing approaches for these models. Two competing approaches. According to the first approach, models should be purely technology-based, which means that they have to be fully automated. According to the second, AVM-supported valuers work, and it should be the responsibility of the valuers to accept or reject AVM's proposed valuation parameters. I have a clear opinion regarding this point. It is the valuer who will have to be responsible, and it's true for residential and commercial properties alike. Also, residential and properties will be valued with automated, supported, much more often than commercial property. It is important to disclose the models, which means that black box solutions are not appropriate, and the underlying data must be solid. This means that data and models that work on the basis of quotation and offered data are not, in my opinion, not viable, and at least not for banks. We would welcome if your organization agreed with these positions and if these positions were then laid out in the relevant standards. Now let us talk about something else, the topic of the geo-information system in the real estate industry and valuation. The growing amount of digital information in connection with the most modern web technologies has significantly increased the number of applications in which geo-information system can be used. In addition to showing the data on interactive maps, a clear benefit of such systems in their ability to establish analysis correlation between spatial information. I believe that geo-information system will therefore become a valuable tool in supporting business processes in the property industry. For example, real estate portfolios can be linked with market information in order to evaluate structure and visualize them from the point of view of risk analysis. With respect to the market and mortgage lending value, important parameters for the valuation of the properties, including land values, cadastre maps, social, geographic and economic indicators can be made available. Yesterday afternoon we saw some tools which can deliver such information. and it even is possible to retrieve opinions on flat risk for forecasts regarding the development of certain markets with geoinformation system. Ladies and gentlemen, I hope I have been able to give a little overview about the challenges that banks currently face and how important the work of Hypzert in Germany and your association in your country is. Ladies and gentlemen, I wish you all a successful conference and interesting conversations and networking opportunities. And of course, I wish you ongoing success in your daily work. Thank you very much for your attention.
Thank you very much, Mr. Lux, for your address. Ladies and gentlemen, before we proceed, there's a very important announcement that I would like to make to you. How many of you have actually punched your ID card today and yesterday? I expected 100%. Okay, let me now share this information. I believe whatever the percentage is left, now it will be 100% completely. The certification, I'm sure you know that it will be given towards the end of this session, right? The certification will be incomplete if you don't punch your ID card both the days. So the attendance is a must. If you've forgotten, or maybe something has happened during the registration or after when you're coming over here inside, you've forgotten to punch, make sure that your attendance for 2 days is already there punched. So do the needful little later, but do it as soon as possible, all right? Without these 2 days attendance, the certification would be incomplete. Moving on to the next speaker that we have, of course, Mr. Sanjay Gupta. He is the Managing Director and CEO, PNB. And he is, of course, chairing the session. I would request him to come forward and say a few words.
Good morning, ladies and gentlemen. I'm really, honored and humbled to be amongst such illustrious civil engineers and valuers. I'm not. I'm a user of valuation as a banker. Just let me give you a little bit of an overview of the Indian market, because it is very important, and all the valuers and your valuations and your outputs are very, very dear to us, and they make a lot of difference when we are doing our banking activities, especially in the mortgage field. So India has one of the lowest mortgage to GDP penetration in the world at about 8%. Even though the CAGR growth rates are staggering at about 18% from last 10 years, but the penetration to GDP is not going up because the GDP itself is expanding very rapidly. And, to our utter surprise is that the volumes are large. So the other day, I had some colleagues who had visited me, and they were trying to estimate how many valuations in a month do the banks, HFCs, and the housing finance companies must be doing on an average. And I estimate that if the market is about 5 lakh crores per annum incremental disbursements, and the average ticket size is only 2 million Indian rupees or 20 lakhs, we must be doing 250,000 valuations in a month. And that is a staggering figure, right? And I said it as in a month, and there are 12 months in a year. And the best part about this is that valuations, this is only the retail part that I'm talking about. There's an entire host of services which are required to be more accurate, to be more dynamic, to be more, I would say, accessible in an easier manner through the e-medium for the corporate finance, because there's a credit flow on the supply side also, which is not so large, but yes, it is at least 25% of the retail business. And that is where, a lot of dichotomy is really happening, is the valuation differences between the retail sector and the corporate sector. And I do realize as a banker, because I'm the guy who would be asking a lot of questions. We have a total in-house team of about 140 odd valuers within our company across the country. Is that why on the retail side the valuations are so volatile? And I get to listen or to hear is they are individually based on the type of negotiation that an individual customer has done. Whereas on the corporate side, and which is more sensitive and the ticket sizes are large, they can be as big as about anything north of $25 million US dollars and above. They have worked on averages and they have worked on the DCF model, whereas on the retail front it is on the market valuation as it is happening today. The other very big challenge is that the government indices are not standardized, and each micro market has got then micro pockets. And why the government indices are not standardized across the country is because there is a transaction revenue which the government earns. So most of the places will have indices which are far, far higher than the market actual transaction value, because the government earns a better revenue. And in a lot of metropolitan cities, especially where the valuations, the market valuations are high, the government indices are lower because the transaction velocity is much lower. So these are some of the complexities with which bankers like us sit every day, and we have spent a guy like me has spent about 3.5 decades only in mortgages across the country. So, I'm really, and that is why I came here this morning, and Sunil was very kind to sort of, introduce me to all of you, was to basically hear from you, how can we make valuations more accurate, both at the time of the transaction happening and unfortunately at times, not too many times, 1% of the time, at the time of repossession when the valuation just crashes. And it is expected that the banks should, take a haircut. It's become a fashionable name in today's parlance, but I don't believe in it. If we have done our valuation well, if we have done our credit appraisal well, if the LTVs are moderate or within the norms, and we are sensibly, and I use the word sensibly, monitoring our projects and our, our portfolios, there should not be an incidence of haircut. But having said so, I'm very, very excited to be with, all of you and to hear you and to have different views. Very illustrious international panel, and thank you very much for having me here, and I welcome each one of you from the bottom of my heart. Thanks a lot.
Thanks a lot, Mr. Gupta. Well, we are now in the panel discussions. Well, before I start the panel discussion, rather I have already started, I would like to request there will be definitely question answer session, but the questions that you want to ask from the panelists, you write down the question within this time, and 10 minutes before the question answer session, you hand over your questions to our representatives here in the hall, and we will select 4 questions out of those for answer. And I will read out the name of the question setter. He will come ask the question. So because I don't want any kind of indiscipline, I should say, because we the valuers are told that we are very indisciplined. So we don't want the same thing happened here. So please, whatever has been there in your mind, you write down in a sheet of paper, one man, one question, and hand it over. And I would like to prefer 4 questions from 4 different regional people from India, Northeast, West, and South, so that the question could be asked on that perspective. So thank you very much for the cooperation that you have already provided to us, and in future you are going to provide. Well, the very first questions, another thing is that this is a global conference. So we would try to analyze the problems, and I should not start with the problem, the solutions. The solutions for the mortgaging, what they are facing in their countries. And then we'll come to India. So first of all, I would like to raise the very first question that would come to our mind. And definitely in every seminar, when there is a question and answer session, this question is asked first. Most of the question on that fashion. So, ladies and gentlemen, the first question to our international panelists, I would start with Sopon, because Sopon is there not only from Thailand, but he is absolutely acquainted with the business of valuation in almost all the Asian countries and even the Pan-Pacific countries. So Sopon, the first question is how the fees of a valuer is fixed. Sopon, the question is how you calculate the fees of a valuer.
Yeah, the fee is around 0.1%, but allow me to say a little bit more. I would like to say that, good morning to you. I would like to say that for mortgage valuation, eventually it won't last long. I think in the future, many banks in many countries may take over to do it themselves, in my opinion. And the fee as asked, normally it is around 0.1% of the property value, but we don't go by percent, but it is 0.1%. But in the future, by the KAMA or AVM, Computer Assisted Mass Appraisal or IVM, the fee may drop to 0.005%. So it will be very low. So that will be the future of us. Whereas for the case of the brokers, it will be 3%. In the US, maybe even 10%, or some countries. Yeah. So in this case, I think for the high tech, for the free data, for every good environment, it is not good for our valuers. It may be good for brokers. You can see that we have free data, but we still need to use brokers, even in the USA, where the technology is most advanced. So they try to control the industry. One thing I like to say is that for the difference in the standard, it is really minor, really minimal, really minor case. The thing is how to control the valuers, like indemnity insurance or something, so that the small valuers and the big valuers can be all competed.
So, Dr. Sopon, actually, we are now discussing on the matter of fees. We'll again definitely come back to you on different aspects, right?
Yes, sir.
So, according to Sopon, well, although fees is going to be very low, but I want to know on behalf of the audience that how the fees is fixed by a valuer, because now a valuer cannot charge a fees on the basis, on the percentage, on the basis on the value. This is absolutely a curse. You cannot relate your fee with the valuation that you have made. Am I right? So I would like to request Reiner, what's your institute and the Germany used to do about fees? How a valuer will calculate fee if it is not related to the valuation that has been done by value of the property in percentage, then how the fees is calculated by the valuers in Germany?
Yeah, as I mentioned, I'm coming from the banking industry, and in a lot of organizations, I'm the enemy because I'm the representative of the banks. But let me explain on another way. When we start with our certification process from valuers outside of Germany, we got the appraisal reports from them. It's necessary to send us 5 appraisal reports. And very often these appraisal reports had or have 150 pages, 180 pages, or 210 pages. And we at Hypzert said at least 30 pages. And then the valuer said, no, it's not possible. And my colleague said, we take us tomorrow 1 hour time and we go page by page, and in the end you will see 30 pages is enough. And she did the exercise, and 30 pages are enough. Because who is reader of these valuation? It's an officer, is a loan officer. And the loan officer is familiar with all these things. It's not necessary to tell the loan officers 20 pages about the development here, for example, in a city like New Delhi. He is familiar with New Delhi. And to have a page for the location, to describe the location is enough.
The fees? I'm sorry to interrupt you. How would you calculate the fees? The basic question is how a valuer in Germany calculates his fees.
To calculate this is one part that we say if the work is much less, the fee can also be a little bit less. And it's not depends on the value. In the bank we said if you do, for example, a residential report, you need half a day. Half a day, maybe 500 euro. If you made a valuation of a hotel, and it's 200 million value, for example, market value is 200, you need in the end maybe 3 or 4, 5 days, not more. And 5 days are 5,000 euro. It depends not on the market value, it depends on the work.
Fine, fantastic. So it has come out from them that generally the progressed countries, the valuation fees has been dependent how much work hour is involved in doing the valuation, and definitely not on the valuation. Let me go to Abraham. In fact, I would like to tell you that their country, Kenya, already has a Valuers Act. So, Abraham, you must be, hearing what the other people are telling. Now, how in your country, you told me it's a good one that valuers are having good value, good fees. Now, how you have calculated the fees for your clients?
In Kenya, we use the scale of fees as defined in the Valuers Act.
It is defined in the Valuers Act, the scale of fees in Kenya.
Which provides for 0.25% of the value of the property. But
so it is related to value. If the
yes.
value is say 5,000 euro or $5,000, then your fees will be 0.25% of that. Are you following the international valuation standard?
That's where I'm going.
You are going to? Right?
Yes. The challenge is the Valuers Act was done in 1984. But what we are facing now is pressure from the market, from the banker, that you cannot charge your fee based on the value, based on the result. So it's still a tussle in the market that we want to follow the law as it protects us as valuers, because that is the only way we can be safe from the banker. Because the banker is looking at total cost of capital, the total cost of loan. So when they are evaluating the loan, they would want to reduce valuation, but they are happy to pay the lawyer more.
So Abraham want to say, well, there may be a 0.25% of the value as a fee, but the fee is always negotiable. Fee is always negotiable, and the top of the fee level is 0.25%. It may be 0.25% also.
It cannot. The other challenge we have is the competition authority.
All right. Well. So the matter could be referred to the competition authority. That's a very good point. That if that is defined in the act, that 0.2% would be the fee, then you cannot quote a fee, very low fee. Then it would definitely go to the competition authority, who can say that no, it is rejected. By quoting a very low fee, you are destroying the competitive attitude, the atmosphere. So that's a very good point. Let me come to Harun or Rashid, who is from Bangladesh, our neighboring country. How, Harun, you calculate your fees?
Thank you. My country, survey fee depended on lowest 4,000 and highest 30,000, but 0.03 to 0.05 calculate. But another bank, another system. Survey company, MU for bank, this bank declared the fee. But at present time, Bangladesh গভর্নমেন্ট ডিক্লারেড নির্দিষ্ট টার্গেটে ভ্যালুয়েশন ফি ভেরিয়াস অফ প্লট ভেরিয়াস outside of city, bank, bear of convents. Actually, we fight for bank. The fee is very low. So our association submitted bank the fee minimum start for 6,000 and last figure is 15,000 and difference float, but difference part mortgage land is actually plot industry land apartment. The brewer mortgage land is 2, 3, 4, 5. One land Dhaka, one land Chittagong, then one land other side. Distance for 400 kilometer, more than 200 kilometer. So different fee calculate we submit bank negotiation for party.
So again the question comes as, well, whatever may be the fees, even in Bangladesh, finally negotiation comes place. So whatever may be the fees written even in your act, finally you have to negotiate the fee to come to. So is there any requirement of a percentage of fee or any fee chapter in the act, proposed act, when you have to negotiate always? When you make a fee as a 0.25% what he has said, you cannot go beyond that. So what is the opinion of our own valuer? Let me come to Mr. B. Kanaga Sabapathy, one of the very famous valuer from India. What's your opinion on the fee structure? Rather, I should not say structure, how we should calculate our fee, the valuers in future.
What is the purpose of valuation, sir?
Any purpose, sir. Fees does not depend on purpose.
No. Fees depends upon the purpose of valuation, number one. If you say mortgage valuation, my answer is different. Okay. Before we go further, what is the meaning of mortgage? There is a French word. Mortgage is a French word. The meaning is death contract. The meaning of mortgage in French word is a death contract. Now, if you see it's a bank valuation, mortgage valuation, I say 0.05, 50 rupees for every 1 lakh. There is no maximum limit. However, when the value certified is more, it is subject to the negotiation, number one. Number two, in our country, CBDT has formulated certain fees. Now, we all have passed 34 AB of wealth tax valuation. Almost every one of us is registered valuer. There's a standard fees. Previously, it was 100 rupees, 125 rupees for every 1 lakh. Now it is a maximum 50 rupees for every 1 lakh. So we are happy to see 50 rupees 1 lakh. However, if the value is too much, we can negotiate it. That's the only thing. However, these fees holds good only for the purpose of mortgage. If it is for capital gain, income tax, liquidation, etc., etc., definitely the fees will be vary, subject to the negotiation. That's the only thing.
That's very good. So he said that, fees also, we know from the basic principles of valuation, writing and these things standards, that your value varies from purpose to purpose. Now this is a very new concept, I believe, has come across, we have here, that your fees will also vary from purpose to purpose. Definitely fees will vary from purpose to purpose, and here the purpose is absolutely for mortgage valuation. And now I'm coming to the final thing, is that now we are in the regime of Insolvency and Bankruptcy Board of India, and they have released a code of conduct for the registered valuers. And now the banks have given in their policy that they will prefer the registered valuers under Companies Act, as well as along with the Wealth Tax Act. Now, if a valuer is registered under Wealth Tax Act, he cannot charge a fee on percentage basis, because in that case, it will be against the code of conduct. So now people has to think, and the banks also has to think, that you cannot select a registered valuer under IBBI as your panel valuer as a qualification, and at the same time, you are proposing a fee structure which is in percentage to the valuation. So final wordings from our own Mr. Sunil Aggarwal. Sunil, please tell us in these fees.
Okay. I've been in the services business for about 25 years, and every services business normally will capture the mandates that you kind of put into the work. But there's one point that I would like to sort of mention. My boss, Akshay, good friend of Sanjay ji also, used to say that if you had a heart surgery and there is a 10 lakh rupee surgeon and there is a 10,000 rupee surgeon, if you can afford it, you will always go to the 10 lakh rupee surgeon. Now, fees being defined also assumes that every valuer has a similar kind of capability and skill set, which is also not true. And as valuation community, I think if we prove that we have the ability and skill set to add value, you can charge a humongous amount of fee. I'll give you one example. We were engaged by a firm called the Tata Telecom, and the fee was on a bidding process. Our firm quoted a fee of 50 lakh rupees for doing valuations for VSNL. Our competitor quoted 5 lakh rupees. And these are all international property consultants. The presentation was made, our presentation was 5 slides. And the other presentations were 50 slides each. But we got the assignment because we said VSNL is a security installation and you were not allowed to get inside. The challenge was, how do you value when you don't even get inside the property? And we did it on a basis saying that government is very inefficient user of space. Sawa so foot per person was what they were working on, whereas in a private sector, you would work at 75. So 50 square feet per person was vacant. And Tata's won the bid against Ambani's. We had a clause that if you win it, then you should give us a small bonus, and we got the bonus. So if you add value, you can get much more fees. And I would encourage every one of us to go to the client and say, hey, you're making a decision to make $1 billion, you're spending a lot of money. I will tell you as a valuer, whether the broker is telling you the right thing, your team has the capability, but I have the capability to get to the right value. So long we do it, your fees can be infinite. That's the message. So we all as valuers should add value to our work, fee will come. KPMG भी करता है, RBI से भी काम करता है, हम भी करते हैं, आप लोग भी करते हैं, सब करते हैं. But the fee, that client's perception of value is very different. And I think that perception has to be created. Thank you.
That's a great message that has been given by our Sunil. Well, sky will be the limit for your fees in your future valuation in India. That's great. So let's come to the next one. The next topic that we have decided here for discussion is about the end users, the bankers. Well, it's a very known fact that because of, definitely all over the globe, because of faulty valuation report, the bankers or the end users facing a huge loss. That's a true fact and everybody has to accept. And in most of the developed countries, it is a very, very common phenomena that the valuers are sued for that. Well, now this is emerging economies. We are talking about the emerging economies. Now we are in India. And so what we have seen in our case, that bankers wanted to safeguard their interest by providing, by giving an indemnity bond to the valuers and signing them. Now the question is that, whether that is sufficient, whether internationally the indemnity bond is given to the valuers before giving them any job, and whether the signing of the indemnity bond really protects the interest of the bankers. So again, I'm first coming to Sopon. Yes. What's your opinion on indemnity bond, or basically the banker should ask for a policy, the insurance policy from the banker, from the valuer? Question to you.
Thank you. In Thailand, for the fee, you can go to our website, Thai Appraisal Foundation. We publish the standard fee every year. For the indemnity insurance in Thailand, we said that if you insure for $100,000, you can be covered for around $30 million, something like that. So this should be done because if we have indemnity insurance, small valuer, small firm and big firm, they are all equally competitive because they are all insured, they are all responsible for the clients. If there is no system like that, the big one, with big names will be more privileged. And apart from the indemnity insurance, the board of valuers, supervision, the board of valuers, or maybe the council or the IOV, we need to examine the work of the valuer as well. Like some good banks, they will examine the valuation result prior to their giving loan to the clients. They do not just blindly believe in the valuation report. And this also help to examine and also to do the quality control. Thank you.
Okay, so his opinion is that not indemnity bond, but the valuers and the bankers should go for the indemnity insurance for the valuer. Well, what about Lux? What is your opinion? How the Germany is facing this problem and solving this problem of loss due to valuer's report? Well, the question is that suppose a banker faces a loss due to a faulty valuation report, and how they can protect bank's interest because of this faulty valuation report, how they can recover the money.
I work now more than 23 years in the banking industry, and I haven't heard it until today, that the bankers ask the valuer for the problems which happens with the property. And that is what I tried to explain it before in my answer. The business in Germany is maybe runs a little bit different than here in India and other countries. When the valuer is doing the appraisals and he's more or less finished, he contacts the bankers and they said, okay, I'm now finishing, what do you think? And the banker said, yeah, okay, that might be good. And then the valuers do finish the valuation report. That means in the end the banker have said, okay, that's the quality which I wanted. And that is also the reason that he cannot ask 3 years later for any punishment.
Oh, fantastic. So, they are looking for the quality of the valuation, and there is no system of punishment after 3 years if it faces any losses. That's great. That's great for the Germany, and they have this mutual respect, that the bankers has a mutual respect and the valuers and bankers have mutual respect to each other, that what has been done by a professional should be taken in a professional manner. That's great. So I would like to ask you straightway this question, that in which way the Kenyan valuation used to protect, by providing an indemnity bond to the bankers or having an indemnity insurance for your valuers?
Under the Valuers Act, we have a requirement to have indemnity cover and insurance cover. But we feel as valuers, it does not replace the experience and the competence and the accountability of the valuer. Because what we are having is banks are insisting you raise your professional indemnity cover, so they give you more work. They forget about the experience as a valuer in doing the assignment. So it's now a commercial.
Okay. So here also in Kenya, there is no system of indemnity bond, but there is a system of indemnity insurance which will protect the interest of the bankers if there is a failure because of valuer's negligence. Finally, I'm coming to again our Mr. Kanaga Sabapathy, his opinion about indemnity bond and indemnity insurance.
You trust me, I'll do a fair valuation. I will continue to do a fair valuation. A valuer should be in a position to carry out valuation without any fear. Few years back, cricket team under the captaincy of Kapil Dev went to Sri Lanka. All the umpiring decisions were against them. India lost the match. And someone asked Kapil Dev, I said, why you have lost the match? Kapil Dev beautifully said, when someone is pointing a gun towards me, we are not able to play fairly, so we have lost it. Similarly, when bankers are pointing a gun towards the valuers, we are not in a position to carry out the valuations properly without any fear. Number two, many people think whether it is indemnity bond or infinity bomb. We used to have a seminar in Tiruchirappalli, and once in one seminar, we invited High Court Justice, Mr. B. Rajendran. We asked the same question to him. I said, what's your opinion about the indemnity bond? He said, as a justice of the High Court, no bank could insist any valuer to execute an indemnity bond as it is only a personal contract. After all, the valuer is giving his opinion on the basis of the relevant documents and materials in arriving at a conclusion. It is for the banks to accept it or reject it. Therefore, they cannot insist on executing any indemnity bond. The banks always have the prerogative either to remove the person from the panel or to make a complaint to the respective apex body concerned. Nobody can compel any valuer to execute an indemnity bond.
So that's great. That's great that his opinion and that there shall not be any indemnity bond.
Before I complete, just one minute. There is in page number 43 of the obligation of the bank on policy on valuation prescribed by the bank, it has been mentioned, no security deposits or any other indemnity money should be taken from the valuers as security for the professional services that they provide. Whereas the bank insists the valuer to execute indemnity bond. In some of the places, they want the valuers to attach the copy of indemnity bond in each and every valuation report. The indemnity bond says, I specifically agree that this indemnity shall continue to remain in force and I shall continue to be liable there under for all losses, damages, costs, charges and expenses arising out of any act, lapses, defaults, negligence, errors, mistake committed by me in performance of my professional obligations and shall be binding on me and my legal and personal representative, successors and assigns. For the what all the value, what I have done, I am responsible, I am prepared to sign the agreement, no problem. But for the silly mistake, what I have done, I cannot request my granddaughter to be responsible for the wrong thing, what I have done it.
Thank you, sir, for your opinion. But one thing, it may be clear that when your rights or property goes down to your granddaughter and grandchildren, they have to take care of your liabilities also. Whether it has been written, whether you have signed an indemnity bond or not, if it is a criminal obligation, yes, it will be finished along with you. But if it is a civil liability, then your predecessors have to take care along with their rights. So our question is that, no, whether it is right or wrong or yes or no, that will be settled by the court of law. So we have to say, no, that's great. If it is really no, no problem at all. You can do it at your will. Sir, I have told you that if you have any question, you have no question. That's great. So let's go to Sunil Aggarwal.
Dev, excuse me, Dev.
Let's go to Sunil Aggarwal.
Excuse me, Dev.
That whether we'll go for, sir, I understand. Whether we'll go for indemnity insurance or
Dev.
indemnity bond.
Excuse me, Dev. Mr. Dev.
Yeah, go ahead.
I think Mr. Dev.
Sir.
Yeah.
Mr. Saji Kumar.
Excuse me. Yeah. I think the market should speak first and the regulator last. I think I am doing that. I think I've been listening to the issue relating to fees and the indemnity bond. I don't want to put it as the official opinion of the authority, the Insolvency and Bankruptcy Board, which is here to regulate the market. I think all these questions arise only because of the volatility. You know, valuation profession is like equity market in India, right? It's volatile. And it's again volatile because it is unregulated. If you analyze any regulated market, these questions would never have arisen. I'll tell you. First of all, fee. Legal profession is one of the oldest professions in the world. Who determines the fee? The lawyer, right? Who pays the fee? The client. right? This profession, the valuer profession, has not risen to or graduated to that level. And I really agree with you, sir, with you, that unless we build up credibility, to the profession and the result that we bring out, we are not going to get the fee what we want. And if you are credible, if your valuation is proper, the margin of error is very minuscule. I'm sure this profession is going to last forever. And especially when we are living in a global world, we have a global summit here. India cannot, stay back. India has to come to the forefront along with the other countries. Every country has to compete with each other to sustain in a highly competitive market. And the intention of the government as well as the Insolvency and Bankruptcy Code is to strengthen your hands. We are not here to administer you. And I can assure you that it's possible only with your cooperation. We are not going to, there is a provision of penalty in Section 247 of the Companies Act. I don't ignore that. I don't know, why this was required. I'll tell you, I had the privilege to be part of drafting of the Companies Act. When this was brought to the Law Ministry as a single section, single chapter, in fact, we raised eyebrows. Is it possible to regulate this bigger profession by a single section? But that single section, when we started rolling out in 2017, has brought about a lot of, discussions in the profession, in the market. So maybe because we have not graduated to that level, a percentage of fee may be required. I'm sure once we prove our mettle, nobody can fix the fee. The fee should only be reasonable, and what is reasonable, that is to be decided by the profession. And that is possible only when you give out a flawless valuation. The other thing, indemnity board. Do you have an indemnity board in other professions? You go to a doctor, of course, when you are taken to the ICU or the surgery, operation theater, of course, because these are more, difficult things, riskier things, there is a kind of consent by a relative, or if you are able to give the consent, you as a patient would give, but not an indemnity bond. No, I think that cannot be the official stand of any government or even the authority. This is my personal opinion again. So I just want to flag these issues to you. Thank you.
Thank you very much. So what we have seen, that the entire valuation community in India is absolutely against indemnity bond. So there shall be no indemnity bond in the field of valuation. As has been rightly said by Mr. Saji Kumar, that if it is a profession like that of doctor, advocate, or architect, nobody is ready to provide an indemnity bond, and definitely the valuers are not. But again, what has been seen from the valuation practice of other countries also, yes, we need a protection by taking an indemnity insurance. In the era that the future of valuation, for the protection of the valuers, we need indemnity insurance. So thank you very much. Next time, our final discussion question is that for the bankers as well as for the valuers altogether, that that globally the countries are adopting international valuation standards, or they are preparing their own standards on the basis of international valuation standards. As our India is a very big and great country, so we need to have much more addition with the international valuation standard. So we are in the process of making our own standard, but in the meantime, we have adopted the international valuation standard. Now the question is that, whether the banks are ready to accept that. Because what we have seen, the policy of different banks, that their valuation format, in many cases, there is a direct conflict between the valuation standard and the formats provided by the bank. So how the international community, whether you have already, you are facing this problem at all, whether your banks, the format provided by the banks for your valuation is the same that of IVS, or there is no format at all, valuers used to do by their own. That's the question to you. This is the final question of this session for the international community and the other panelists here. So first again, I'm start from the Abraham. Is there any specific format of valuation for banks in Kenya?
Yes, the banks prescribe a format based on their requirements.
Now, that format is as per the IVS, or
No.
there is any conflict?
Which is in conflict with the IVS.
Fantastic.
And what we have done, because we don't have a standard ourselves, and that has been difficult to tell them why we think that conflicts with the IVS. So we are developing a local standard, which will now be adopted by all stakeholders, which is in line with the IVS. So we've spoken to the banks. In the interim, they have changed, some banks, not all, because they appreciate that it needs to be consistent, reliable, as defined by the international
That's great.
standards.
So, Reiner, would you like to tell anything on that?
Yes, in Germany we don't have a law. The valuers protect their work and their jobs with quality. I think day by day they produce the best appraisals and the best valuation reports, and that makes the job sure.
So there is no specific format from any bank, any Deutsche Bank or any bank in Germany?
They
There is
are
no
using Hypzert designated valuers. When I mention these studies, for example, these studies are not done by Hypzert. It's done by the valuers, which were designated by Hypzert. And the banks realize this. They know that is the best quality in the market, and therefore they ask the Hypzert valuers to do the valuations.
Thanks. Sopon, a few words, please.
Every bank in Thailand have their own valuation report format. Although our foundation, our association try to have a standard formats, but they still want to have their own format for their own ease.
Is there any conflict between IVS and the bank's format?
For the report standard, there is no conflict. But as I said at the beginning, for the valuation standard, there is no conflict. There may be some slight difference in the explanation only. So the standard is not the problem. The problem is how we perform the standardized valuation practices.
So finally, in this last question, I would like to have the answer from Mr. Gupta, who is the only one representing the banking community in this panelist. Sir.
We also have Reiner, as an ex-banker. What I would say again distinguish between retail and the corporate finance. On the retail, yes, the formats are standardized because we being a technology advanced company, we need it to be uploaded through an API or an application. But, on the corporate side, it is more descriptive because DCF methodology is used. Now, answering, I'm going back to the previous two questions. One is obviously, as our colleagues also said, fees should be discussed rather than there should be a templated fee. Because the quality is very important, the scope is very important. And the second thing is, obviously, if you are bringing value to the table, there should be, even on the retail side, a little bit of description. And most of the times, because as the head of the institution, whenever there are write-offs, etc., they come onto my table. Excuse me, I'm sitting amongst hundreds and hundreds of valuers, and you are really sweating yourself out in heat, rain, and winters. But the quality of report, which Sunil also mentioned, at times, just because we are working towards automation, towards numbers, at times it is found much lacking. Supposing there is, let's say, a garbage dump, even in a Panchsheel Park, which is a AA rated society in Delhi. How can my valuer, who has made a valuation a year back, not mention about it? And that is where, the discussion and the debate comes. We are working for whom? Are we working for the betterment of the society? Are we working in collaboration? Are we partners? Or we are competitors just to earn a revenue? And that is where, that element of mistrust. I mean, I'm surprised that you have raked up an issue of indemnity. Then I should be indemnifying my 1,700 employees, and each of the 1,700 employees should be indemnifying me. Why are we bringing that element of mistrust? But are we doing our job perfectly is a question. And more and more this digitization and online and all those things are coming. My engineers have become laptop engineers. They don't go to the site, or if they go to the site, they have lost their power of observation. And when a non-banker goes and visits a site and he sees a big sort of a depression or undulation or the excess road not there, I said, well, this is not the valuation. This might be the average valuation for a county, but this is not the valuation for this plot or this building. Then, yes, sir, actually, sir, this, sir, that, sir. What the bloody hell is that? And unfortunately, all these discussions only happen when there is some sort of disharmony or some sort of a dispute. When everything is hunky-dory, when the valuations are going up and the property is appreciating 35-40% CAGR in this country for a decade, then nobody had this sort of a conference. When the slide is down and everybody is anticipating that the slide will be faster than the growth, then we are all together. And we are trying to, pass the buck of responsibility from one table to the other. That should not be the approach. We are together owners of this asset. Right? Whether it is valuer, whether it is legal. Now the valuer will say, well, I went there, I saw it was occupied. The valuation of a vacant peaceful property is this, of an occupied property is much lesser. So, but this is not my job. This is the lawyer's job. I don't think we are doing our job properly.
So, sir, one last
excuse me, if you
what do you want to say?
15
so,
seconds,
Saji
15
Kumar.
seconds.
Yeah.
I don't want to, I fully agree with you, sir. When you have the right spirit, capacity, knowledge, and experience to talk so openly. Because as individuals, belonging to this society, I think we should have a responsibility to the society. Of course, this profession, when we practice, we earn money. We earn money through our work, our professionalism, our credibility, our knowledge, and our expertise. And when we make money, it's not that it's, personally we are benefited. In fact, we should have this thinking that we are actually for a big cause for the nation. In fact, business is not private anymore. If anybody thinks that business is private, I'm sorry. Business is for everybody. If I make money for Mr. Gupta, and I make money for everybody. Directly or indirectly, the whole society is going to be benefited. The whole economy of the country is going to be benefited. The whole global economy is going to be benefited. The society, the mankind is going to be benefited. Please have that conviction. And if you have that conviction, I'm sure values profession will be respected like any other profession in this world. Thank you.
Thank you. The last word from our Sunil before we go into the question answer.
I will just put one thing, Sunil, and it's coming to my mind, sir. As a doctor, what has happened is that we have started treating illness and not a patient. We should treat a patient and not the illness.
Sunil.
I just had one point because we do valuations every day, and every day bankers ask us to do this to the value and that to the value. And so, I completely accept with what Deb said yesterday. I think there's time that we went and educated some of our end users. I'll give you two examples. One is we do a lot of these insolvency valuations, and there's a constant debate, what is the value? Is it the land and buildings value, or it is the value which accounts for receivables and the expenditure? The purpose is very clear. And to say to Mr. Sangapathy, I think if as a valuer we do not understand and do not force our client to give us the right brief, we will even if we follow IBS standards, we will be violating the spirit. So when you do an insolvency valuation, it is for the purpose of A, resolution, and B, it is for the purpose of sale. And you should go and ask, what is this for? What am I valuing? I think a lot of confusion when it comes to indemnity is a very draconian word, and I don't accept. And why this came in was because SBI recently, for impanelment, asked for indemnity of valuers, which was completely out of the, it's crazy, if I can say. But what also, as a banker, and that suggestion is to you, sir, is, and I know that you have, also tried to change the policy, so I think I was very happy when a bank also tried to learn, is that there is a dialogue that's required between a valuation community and the banker, because bankers को जो चाहिए, ज़रूरी नहीं है वो हम as a valuer लिखते हैं. So कोई valuer कहता है, I mean, I've had banks which said, please do not consider the receivables at all, and give me a construction finance valuation. Other bank says, no, please consider it. Now, this is as per the policy of the bank, not as the policy of the valuer. So, valuer should say, sir, mera valuation ye hai, whatever in addition is required is a bank's credit call. And I think as a banker, sometimes what happens, sir, the gun is on the shoulder of the banker, and the credit tries to say include it, exclude it, depending on whether they like the deal or not. And that's something which
Sunil,
I think should be...
That happens in a cartelized and a monopolistic environment,
Yes.
and not in a free economy, because the customer has a choice and the banker has a choice.
Correct.
Unfortunately, and I'm making that comment, I can get into problem. With the current situation, what is happening, the blame game shifting, we are working towards a monopolistic and a cartelized economy. People are scared. So only the large and the bold will survive, the rest will perish. And everybody has a favorite. We are all human beings. And eventually credit flow will happen to the favorites and not to the masses.
Thank you very much, sir. Well, straightway we are now going into the question answer session. We have chosen 4 questions. The very first question is from our very own and very respected Mr. Kirit P. Budbotti. Sir, you please ask the question for yourself.
Good morning, friends. Mr. Lux gave a good example of the mortgage lending value. Now, you see, in 2001 IBS, there was a definition mention of mortgage lending value. And then subsequently it was removed from IBAC. And recently you said that they are talking, I don't think in IBS 2017 or 19 it is there and they are discussing. Fine. But you know, we had to prepare a paper on mortgage valuation. You know, from different countries we got the different views, and from the New Zealand, I got a very good view that our bankers only ask the market value. And any margin or anything that bank will decide about basis of their own perception of the risks to be taken. Now in our country, we already have Section 5N of Banking Regulation Act 1949, which does not directly say about the market value, but it says secured assets. Secured assets are the assets the market value of which is such that it is capable of clearing the outstanding dues and the principal amount and the interest. And that is why every 2 years banks are asking us to give a valuation to find out whether the assets what are there are secured or not. Then Mr. Gupta mentioned about the DCF. I'll give a very good example of what happened about DCF. You know, due to loan and saving crisis of UK in 90s, most of the valuation prepared on the DCF basis for the commercial property, you know, were not useful to the banks, and banks lost a lot of money, and values has been, you know, they were filed for the damages of the £1 million and all that. That time, RICS came out with one committee under the chairmanship of Malinson. And sir, Malinson says, DCF can give you the value which your client needs. But what is important is that how much it sells in the market. So while using DCF, we have to be very careful. It can satisfy our client, but it will not realize the market value. And the third one, there is a mention of automated valuation models. Friends, those who are interested in knowing about the automated valuation models, please visit the website of TEGOVA, the European Group of Valuers of Assets. They have got two standards on or guidelines on AVMs, which deals with what is the required to be done for AVM, why AVM are not reliable, why valuers themselves are required for AVM. And friends, if you see that website, you will come across whatever the study material we have prepared for IBBI examination on real estate and plant and machinery, you will find on the website of Tagova. Thank you very much. Thank you for giving me the time.
Let me ask Mr. T.C. Narasimha, Bangalore.
Good morning, dignitaries, the panelists on the dais. I am from Bangalore.
Next, Mr. Gurunath Kulkarni from Pune. Come forward.
So the question simply boils down to like this. In the Indian terrain, taking the geographical conditions from Kanyakumari to Kashmir and from Bombay to Bangladesh, and the RERA Act, how automated value methods, that is AVMs, implementations, their functions, taking into the cost factor with reference to the fee structure, will have the impact on the retail as well as on the corporate sector.
So is it a question or a observation? It's a question. Question 2? Okay, Sunil, answer.
So I think there's this big elephant in the room called the automated valuations. And everybody seems to be in the room, that's the feeling I get is that if they come, what are we going to do? So first of all, I think AVMs are at least 15 years away in this country. That's one. So I don't think so there is this whole fear factor, AVMs and this and that. I don't think so Mr. Gupta is ever going to lend money to a machine-generated number unless he himself said that जब तक walk नहीं करोगे market तो कैसे value आएगा, right? So I don't think so any banker in this country.
A civil engineer should go to the civil site.
Yeah.
I mean, technology doesn't mean that you don't go to the site.
So one thing that I have to say is please do not get afraid of AVMs. They are not practiced in US where Norm, who is the father of automated valuations, were here yesterday. And if you heard his speech correctly, he said first regression that he ran, the confidence interval was only 67%. So even in US, jahan data is so accurate, you have a person with Norm's capability, 30 years into research, says my first iteration is 67%. So most of these automated valuations that ran in the US are also on collateral risk management, where a machine told you that how far are you away from the reality. And I think at that level, you will start to use these in India 10, 15 years from now. So your job is secured. That's one. So there is no point in saying, इसमें ऐसा गलती होगा, वैसा गलती होगा, वो सारी गलती होंगी, it's much away. Two, the process behind AVMs, as valuers, we should all appreciate. अगर हमारा अपना database ही नहीं है, we can't look at our own valuation reports. I know in my organization we do 3,000 valuations a month. हम अपना data ही नहीं देख पाते हैं. We have not come to a technology level where we can even see what we have done. So I think it should be appreciated in that light. And this bashing of AVMs, you can do whatever, but जब आएंगे तो कोई job loss होगा, तब तक आप अपनी skill upgrade कर लीजिए. So that's what I want.
So thank you very much. Last, he wants to say something.
I can't resist. You see, whatever we say, nobody, nothing on earth can match human brain. Valuation is both an art and a science, right? You need science for systematic study, evaluation, analysis, but you need brain to actually value an asset. Thank you.
So we have very little time left in hand. Be crisp, and answer is also we'd like to very crisp.
Good morning, everybody. I want to ask this question to Gupta sir. As a banker, I want to ask you, at the time of lending money, bank asks us for the fair market value. And when the asset goes bad, bank do the auction, and bank compares the auction value with the fair market value and says that our capital is vanished. So why bank is not taking consideration in auction value at the time of lending the money?
Okay, I will answer it in a very frank manner. We are in the business of doing business and not in the business of not doing business. Right? So when we are doing a new business, I will never say that flabbergast or, sort of compromise on your standards and give us inflated valuation. So that is the time we take a fair market value. And if we are auctioning a repossessed property, that is the time we are taking the realizable value. Not the auction value, but the realizable value. And this is where, my past conversation also gets a little circled back. And that is, we will never blame any of our subject matter experts for what opinion they gave 2 years, 3 years back. But when you really go into the sort of the genesis of the challenge which has got precipitated, that is the time when you realize that, well, mister, when you gave us the fair market value at the time of acquisition, that problem or that challenge was already existing. Now, don't take a harbor of that challenge after 3 years and say, well, the realizable value is only 1/3 of the previous value because of that challenge. The challenge was there, or the defect on the site was already there. And that is where, I would say, the debate starts. And it stands at a debate. It doesn't go into litigation ever. That is my promise.
Dave, one thing, as a valuer, we should stop using this word called fair market value. I'm very unhappy that this word was used. This word has been scrapped in IVS. It is only market value or fair value, which is also changed to equitable value. So please read IVS. Do not use these words called fair market value, which is an accounting term. So as in a values conference, when we are sitting, I think the question should have been market value only. Thank you.
So thank you very much. So we are at the end of the panel discussions. Yes, we have a very lively discussions. Everybody, one more question. So they have allowed me to ask one more question. And that question is there. Who? No, actually, sorry. Actually, we have so many questions already sent to me, so I can't allow anybody anymore. Please don't mind.
This is the second day you are denying me the opportunity. I believe you should be fair to all. When you allow one person to question more than twice, you should be fair, proper and reasonable.
No. Only one question to
It's
one
very,
people.
I have already sent the message well in advance. The time we take to debate, I can complete the question.
I understand. But the question...
The time we take to decide whether to allow me or not can allow me to complete the question.
No,
I am an ex-banker, I am a valuer now. I worked on both sides of the table. My question is to Mr. Gupta. Some of the valuers may have erred, but please don't generalize the entire community to be so. And let me complete my
Sir, please don't mind. We don't allow this type of comments
Sir,
to the panelists and the guests
No,
in
we are
the
not
stage.
challenging.
So we are coming on to the... No, many questions are there. I said that we can take only 4 questions. Even we can take 4, we can take 3. It's all right. So we will have other seminars. There we will discuss many things. I know that in mortgage valuation, there are millions of questions. So we cannot take right now. But thank you very much for a very lively action. And what we have found out, that one thing is that valuers are united in India in respect of fees, in respect of indemnity bond, and we all want to work valuation with a proper value to the valuers fraternity. Thank you very much.
Well, thank you very much, Deb sir, and at the same time all the panelists and the speakers for a wonderful session. And now is the time for the felicitation. And to do the honor, I would like to invite Mr. Vinay Goyal, the Honorary General Secretary of IOV, to felicitate our panelists as well as the speaker. And at the same time, all the ladies जो यहाँ पर मौजूद है, जो यहाँ पर participants नहीं हैं, उनके लिए एक tour का arrangement किया हुआ है. Kindly, I would request you to please go outside. The Travel Paradise is the counter जहाँ पर आपको जाके उसके आगे coordinate करना है for the city tour. All the ladies, please, may I have your attention? Please go outside of the auditorium, and there is this counter called Travel Paradise. Please coordinate for the city tour. The bus is waiting for you. Sir, we are not even We haven't even announced for all of you for a break. Can I request you to please be seated?
Please be seated. At least as IOV, let us have the felicitation goes on. Please, request you all, please be seated.
And there is announcement every time for the tea break and the lunch break. And of course, when exactly we can get back to each other. And of course, here in the assembly. So please respect that timing and at the same time, the announcement. Thank you so much. And now, can I request Goel sir to felicitate our keynote speaker. He is the Managing Director, Hypzert, Mr. R. Lux. Okay. And of course, the Managing Director and CEO from PNB, Mr. Sanjay Gupta. I would request Mr. Goel to do the honor. Gentlemen in the dais, it was a wonderful session and was very, very interactive. And thank you very much, ladies and gentlemen, for being a wonderful audience. Now I would request you for a break.